let's begin the panel. Hello, everybody. My name is Kerner, and I'm a VC in New York with CryptoOracle. And over the last it's about 6 months. I've been very, very focused on Asia. I actually flew here from Singapore. Under the belief that Web 3.0 is amazing, but the first killer app today in crypto is speculation, and the vast majority of it is happening in Asia. But really the promise and the reason why most of us got into this to begin with was for the decentralization aspect of everything. So I think this is going to be a great panel. We really have 4 great speakers today who are going to be talking about DeFi and how we're going to scale things. And so we're going to start the panel. If each of you guys should just quickly introduce yourself and your company, what it does, and also talk about how many users you have.
Hey, my name is Felix. SET is a protocol built on Ethereum that makes fund strategies really easy and accessible. We built the protocol, the API, and we have a UI called token sets where you can actually get one of these strategies with a click of a button. We launched about a few months ago, and we've grown from kind of 0 to $2.3 million of assets in our system. And we have about over like 1,000 users right now. In terms of like users, I think how we measure it, since we can't really know who the users are, is unique addresses. So there's over 1,000 kind of different addresses that hold sets right now.
Cool.
Hey everyone, my name is Alex and I'm working with Zerion. I'm the CTO. And as Zerion, we're trying to bring DeFi to the masses. So we are building a banking interface on top of DeFi protocols. So all the protocols like Kyber, Maker, Set, we're trying to abstract away the complexity and just to create a nice UI on top of that. So less sophisticated people will be able to make use of the protocols. And in terms of users, so we have 2 kinds of users basically, some people who actually connect some wallets like MetaMask or some ledgers or some mobile wallets. And also we just have users who just add read-only addresses, basically just typing in their public address and watching their portfolios using our interface. So overall we have several thousand users using our interface for tracking their portfolios, and we have a couple of hundred daily users who actually use active wallets, but that doesn't necessarily mean that they transact every day. But we are trying to focus more on volumes right now that go through our interface rather than absolute numbers of people who use it. Yeah, I think that's it.
Yeah, my name is Deniz. I work for Kyber network, and we basically provide liquidity to the Ethereum network. So we have maybe 5,000 end users that use it to swap one token to another. But way beyond that, we also provide liquidity to DeFi dApps, to wallets, to e-commerce and games for whatever use case they might have. For example, Fulcrum or any other app that wants to do leverage trading would need ETH to DAI liquidity, and we're kind of plugged in at a smart contract level to kind of provide that. So our users, if we're 5,000 end users per month, let's say, we also have another 50% of that goes straight to DeFi dApps. So we'd say maybe 60, 70 DeFi dApps would be are also kind of users. So yeah, that's what we do.
Hey, I'm Gustav from MakerDAO, and I work on the partnerships and business side of things. I cover mostly Europe, Asia, and Africa. At Maker, we have created a completely decentralized asset that is pegged to the dollar called DAI, and we issue this. It's a credit issued asset, so we allow people to lock up collateral in our smart contracts, and then based on that collateral, they can take out a line of credit. Essentially accessing liquidity. And in regards to users right now, we have 140,000 individual addresses that hold DAI. We have almost 100,000 people who have issued a CDP, or 100,000 addresses that have issued a CDP. However, a large part of that is contributed to the Earn campaign we did with Coinbase. So in regards to actual CDPs for a little bit more money, it's around 20,000. And we, on the partnership side of things, we recently passed over 300 projects or companies that has integrated with us as a minimum having DAI on their application. So we work a lot on that front as well.
Okay, terrific. Gustav, I'll continue with you. So, you've got I don't know how many daily users. That's also the right way. I appreciated when you guys mentioned that. But I think until you actually go out into the wild, you really don't know anything. And so it'd be great to learn, from all you guys, and start with you, Gustav. Now that you've been out there, what are kind of the major lessons you've learned about scaling in DeFi?
Yeah, so I mean, I think so. First of daily users is it's very hard to track because we actually don't know. We are completely decentralized, right? So we actually don't really know what people are doing with DAI. However, we have reports from some of our partners. So we work also with centralized applications where we know we have up to 20,000 users that, for example, use DAI on a debit card. And there we have 20,000 monthly active users on just one platform, right? So I think just outside of the DeFi space itself, there's also a lot of usage going on centralized platforms as well. And then I think right now something that I've seen is that the more money that kind of comes into DeFi, the worse rates we also get, right? So we have seen Compound has been steadily declining the interest rates that they give. And I think in general this is a trend we should expect to happen more in the future, right? I think we are just now seeing the initial phase of a lot of the protocols adjusting to what does it actually look like when there's activity on them, right? Because if you have a product with almost no users, it's very easy to kind of create a gap between supply and demand and thereby increasing the interest rates quite a lot, right? So I think we're just right now seeing, what does the protocols actually look like with activity on them? And I think it will take at least a few years before we scale up to, a very active level on a lot of the protocols.
And I mean, just to add to that, because we're just kicking off basically, and there's not that many users in the grand scheme of things, I think there's still a risk of mispricing that risk, So there's smart contract risk, protocol risk, regulation risk, and I don't think that's kind of reflected in the price, And I think that's a lesson we're going to have to learn. I don't know, the hard way, the easy way.
It can't be because we don't know what it is.
Yeah, exactly. I mean, it's just such a new space. There's too many unknowns to go off. We have many blind spots that haven't been discovered yet. And when I see a 12-15% interest rate on Compound, I'm like, okay, that's a function of demand and supply, but how well does that reflect the true risks of investing or taking a loan out or borrowing on that platform?
And which, by the way, obviously, even when it's centralized and we have years, we often, don't understand the risks involved.
Yeah, of course. Yeah.
But so in terms of scaling, kind of the major lesson that that you've learned as you try to scale.
Well, one of the challenges we've faced is, the classic thing with onboarding users. There's still too much friction to onboarding, having to download a wallet and acquire ETH and having to get the 12 seed phrases, whatever. It doesn't, 99% of people can't really relate to that. Crypto users, the people who are using DeFi right now, are still coming from within the DeFi space. We haven't spilled over to the more conventional side. And that's one of the problems with scaling. But in any case, Ethereum wouldn't be able to take another 10x or 50x scaling on the current ETH 0.1. So we're kind of limited by that constraint in any case.
Yeah, but my take on that will be that. Yeah, I totally agree that there's so much friction right now just to start to use all the protocols. And I think the biggest friction right now is that people need to pay commissions on gas, which means that they need to have Ether on their account in order to make use of any protocols. And it's super complicated to explain to a person who wants, let's say, who see these 10 to 15% interest rates on Compound. All they just want to buy some DAI to put them into Compound, start making money, but they can't do that because they still need to buy Ether first because it's the only way to interact with the protocols. And I feel that's the biggest friction right now where other people outside of DeFi space can't really use it for now. And obviously there are multiple solutions. I think smart contract based wallets with meter transactions are one of the most prominent ones. So I believe within a year we're gonna see much more wallets actually based on top of smart contracts and projects like Gas Network Station, etc., trying to solve the problem of adoption of people and making it simpler for them to use it. So that's one side to that. Another side, I think it's pretty amazing that everything is super transparent in terms of analytics. So for us as an interface, it's pretty amazing that we can just go on chain to see how many active addresses, let's say, MakerDAO has, and then we can go to our Google Analytics and see how many users that we have that use our interface actually have like DAI on their account, so we can like compare these numbers and to know exactly that, let's say we have like 10% of like all Maker users, or like 50% of all Compound users or whatever. So that's like pretty unique opportunity, which is not something that you will usually have in doing different kind of businesses, because usually it's kind of, the information is much more restricted, so you never know like the exact share of the market. And like here it's like everything is super transparent, so it's like pretty easy and like pretty amazing to know like where exactly you are and like what your share of the market is.
Okay, Felix?
Yeah, I totally agree with everybody, with all the points that are made. I think like reducing friction is definitely kind of a key point. Another thing that, so like the framework that I think of when it comes to like getting more users is really kind of thinking about kind of the total addressable market, right? Like today it's like, DeFi or Ethereum users, like maybe that's like 50 to 100,000. Like in aggregate, if you're being kind of very aggressive with your assumptions. I think the next frontier that like we have to try to kind of break into is really the centralized exchange users, right? Kind of the Coinbase and Binance users, trying to help them do their first smart contract interaction, right? I don't think going to the masses like right now is necessarily the best step, and I think that's where he kind of alluded that what brought them a lot of new users was kind of the earn campaign, right? So I think that the more that we can start like working with like the Binances, Coinbases, other exchanges, and onboarding kind of solutions in the world, like that's kind of the next step, right? So after that, like where I kind of see things is that we want to get the users of kind of the mainstream consumer apps that are friendly to like crypto, right? So for example, like Square or like Robinhood, getting those users and converting them into DeFi users, and then over time you have a whole bunch more steps, and finally we'll be reaching like 1 billion users, right? So I think that there's like two things that will pull users into kind of using these products. One is value. So like, can we provide differentiated value compared to what you can get in the traditional financial system, right? And I think that we're starting to see that, with kind of crypto and the open source nature of it, we have a huge kind of design space that we can work with, right? So I think we could build things that people can't have gotten anywhere else, whether it's like collateralizing anything and getting like a loan on it. That's pretty exciting. I think for us, it's like making these like strategies, fund strategies that are traditionally only available to like quant funds or hedge funds, like available to everybody, right? So I think that it gets more exciting when you kind of like start composing them together and making interesting things. So that's kind of the value side, and then the friction side, we've already mentioned, is really making it easy, right? Trying to make things as one click possible, doing kind of fee abstractions, trying to make apps where you basically don't realize that you're using like crypto at all.
Yeah, I just want to add here. So I mean, at Maker, we have had kind of like two strategies towards these things here, right? Especially when like how do we get partnerships? So I mean, we use analogies for them, and the first one is kind of like we call it like throwing shit at the wall and see what sticks. So like just go out to like a lot of different industries, and then throw our product at them, and see like where can we actually get some positive feedback, some good response, right? And then when you start initiating into these things and you actually see that okay, some of these actually wanting to talk with you, then the next step is like picking the low hanging fruit, right? I mean, we don't go to like the biggest money transmitter on like day one and like, hey, I mean, you should see this DAI. I mean, you can just send it all across the world and it's almost free. I mean, it doesn't work like that, right? You need to like really establish yourself within a use case of like that specific industry, and then hopefully that makes it so that next time you don't target the small company, then you go to like the medium-sized company, then you go to like a little bit bigger and bigger and bigger, right? So that's really like the way that we have seen it. So exactly like Felix said, right? I mean, we need to like scale it up, and right now we need to like pick the low-hanging fruit.
Yes,
yeah.
I mean, one more comment. I mean, I totally agree with that, because like one is, if you're kind of a startup company, you have limited, marketing budget. Maybe Maker has a lot more to work with, but generally it's small, and
we don't.
You generally you need the customer acquisition cost to be low, right? So right now, like in DeFi, if you just build a really cool product, like
just tweet about it.
Yeah, just tweet about it, and then people just come, right? I think when you go to Coinbase users, like you might need to do some sort of partnership campaign. When you're getting like mainstream users, like you're gonna have to like compete against every single other like Web 2.0 application and do ads, and that's like very, very expensive, right? So I think that kind of like scaling your way up in terms of getting users is also important too.
Yeah, I mean, Felix, you said something a little earlier about that bringing them value in terms of bringing them things that they can't get anywhere else. And I described to a large degree what's going on is, like similar to the beginning of television, when the very first TV shows was a guy at a desk with a microphone going, "Hey, now we're on television," right? They were just doing radio on TV, not using the tools of the medium because they just started. So it seems like that's where we're at right now. But and Alex, one of the things you talked about, Gas Network and what they're doing, and I think that's super interesting too. But Felix, I'll start with you. Who in DeFi have you gotten the most inspiration from that you've seen? Wow, what they're doing is interesting. How they're looking at the market. Is there anybody who you think's doing something particularly interesting?
I mean, I think that there's a lot to learn from every single project that exists in the space. I mean, obviously, like the anchors are like Maker, Compound, and those are the ones who have obviously kind of gotten the most success, kind of on the DeFi, assets locked in the protocol side of things. Like Kyber has definitely been kind of a huge kind of player in the liquidity side. So I think that it really it's different depending on who your audience is, right? I think that. I think in general, the way that a lot of kind of protocols have started is they build a full stack experience first, right? You build a protocol and you also build kind of the UI that people can interact with. And over time, once you've kind of proven yourself, developers will actually start integrating you, right? Like Compound has built the full stack experience, but they've actually shifted their attention to focus more on developers who are building on top of them now. But outside of like DeFi, like we look at the ETF space a lot, and that's been an industry that has grown from zero to trillions, I think maybe like 20 trillion in the past 20 years, and trying to learn about how that has evolved has been like really interesting.
Alex?
Yeah, I'm actually pretty excited about like projects that are trying to connect, like to bridge all the protocols together. So like we have like Maker, we have Compound as like core protocols, and now there are like so many like new startups trying to like bridge all of the protocols together. So they're like people doing like interest swaps, etc. So like I just came from the Berlin blockchain hackathon a few weeks back, and I believe like 3 of the winners actually built pretty much exactly the same project, and like all of them got the prize like for creating smart contracts on top of Compound and Maker, just doing like swaps between like fixed rates and like rates like the way they work for Compound right now. So I'm pretty excited about those projects. Also, I find UMA project, the Universal Market Access, pretty exciting because basically what they're trying to do, they are building a network of oracles that will make it possible to create some synthetic assets on top of Ethereum, basically tokenized synthetic real-world assets. I mean, it's gonna require some legal problem being solved first to make it actually work, but I'm pretty excited like for their launch as well. And yeah, also like companies that are trying to solve some technological problems, like Gnosis Safe with their like multi-sig wallets, Gas Station Network, who create like a network that allows dApps to pay fees for their users, etc. That is also pretty interesting. Yeah, I think that's all that I can think of for now.
Deniz?
I mean, what has inspired us at Kyber has actually been going to all these hackathons and seeing these individual developers just building these small incremental upgrades to what has come from before. Like Alex said, we had DAI, we had C DAI, someone went build R DAI, someone built LS DAI. So there's all this stuff that's being built incrementally in hackathons, and we can see the kind of seeding of ideas and people kind of influencing each other to build that next layer, because what we're doing right now is actually building like a foundational layer. I don't even know if we're at 1.0 yet. We're all building these basic services, and these individual developers are kind of going and filling these gaps, and they're building these little niche products that maybe it's not going to work, maybe it is going to work, but some of them do kind of explode and actually become products. So it's been very inspirational seeing this happen everywhere, from Cape Town to Sydney to Boston. Everywhere you go, you see very passionate people actually working on Ethereum, working on DeFi, and building these really, sometimes it's weird, sometimes it's crazy, all these new different things, and that's been very inspirational for us.
Yeah, so right now we're at a stage like Maker where we see like some of the first offsprings of like some of the things that's been tested in more developed markets, like in Europe or the US. Taking like an offspring into like what happens if we apply the same concepts, logics, and framework to emerging markets. So specifically we are looking into launching a product, for example, in a few markets in Africa, where you would just take the local currency, you would send it to an on-ramp that we have in Africa that would automatically convert it into DAI, and then you would automatically put the DAI into like the DAI savings rate, which is our interest-bearing smart contract that will come up later this year, or for example in Compound. And then all of a sudden you can offer people in an emerging market, an interest-bearing dollar savings account where they don't need to have a private key, because basically the custody is handled by the smart contracts, right? So some of those projects are very, very exciting. We also went live with doing microfinancing and lending in Indonesia via a partner called Shuttle One earlier this summer. So actually going out and creating products for people that are very interested in it, right? Because I'm from Denmark, but I lived in Argentina for a year and a half. So I have like a big interest in those markets, right? And it's especially in those markets where you see people, they have a big interest in finding alternatives. We've over the last month see how the peso has declined over 30% in Argentina, and just makes it so people are more open to possibilities, right? I mean, I couldn't pitch Compound or something similar to someone from Denmark, right? I mean, they wouldn't care. We have the Danish crown, superior currency. Why would I use a cryptocurrency, right? But if you go into these emerging markets where people actually have a desire and like an interest in doing something else, right? Because they don't necessarily want their future to depend on the local financial system, because frankly, it hasn't worked, right?
Well, as an American, I feel the same way. So it's not just the emerging markets. You talked about a lot of different countries. From a user perspective, I mean, obviously we can all see why this is great for people in Venezuela or other countries, Argentina. But where do you actually see, to the degree again that you have any insight, where are you actually seeing the usage, in what countries?
Yeah, so I mean, we do actually have a lot of users in Argentina and Venezuela. We have on and off ramps in both places. We work with a few companies that are focused on allowing people to go from fiat in South America. In Venezuela, we use RTM. They have around 120 locations where you can go and buy DAI with your Bolivar. We also work with PondiX in South America. We have Ripio in Argentina as well. We have a bunch of others. We actually also got mentioned.
And is there any country you say, in this country, that's where we're seeing, and again, I know it's difficult, you don't have necessarily any transparency.
I mean, we know the volumes from our partners. So for example, 3 weeks back when the preliminaries went through in Argentina, it seems very likely that the Kirchner government, the old government, is going to win. And that made the peso drop like over 35% in a day, right? So in that single day, we made the national newspapers. We did 20% of our total transactional volume. We did that in one day. Right now, DAI trades at a 20% premium in Argentina because it's the only way you can get money outside of the country. We're actually more valued than a physical dollar in Argentina, which is always also valued at a premium. So we actually do have users. But I can't give you like a specific number.
Sure, but but it's interesting that's where you're seeing, I mean, that's an amazing stat, though.
Yeah. I mean, from Kyber's perspective, we're actually seeing maybe 140 different countries kind of represented in our kind of exchange, and it's a very long tail end. I think first is US with maybe 15%, and then there's like a very long tail end of countries from all around the world.
Do you have any sense on, the United States obviously has a big population, on a kind of per person basis, and if you look at it, based on the population, if there's any country that's really outstanding?
No, nothing really stands out. I mean, it seems to be pretty even and kind of distributed pretty well.
Yeah, Alex, you seen anything different?
Well, for us, actually, most of our users come from either US or Western Europe, and I guess the reason for that, because we basically provide the supply side for Compounds and other protocols. So basically, it makes sense for people who are already in crypto, who already have some money, preferably lots of money, so that you can put them into Compound to earn some significant interest. So that's kind of the typical user who uses our product nowadays. So most of them are coming from more rich and wealthy countries, such as the US and Western Europe.
Any particular countries in Western Europe stand out?
I think we have some people from Germany, specifically, I don't remember, but it's the whole region around there. Also, we have a bunch of people using us from Asia, countries like Japan, South Korea, etc. But they're just for now, hopefully in the near future we expand to more users from less developed countries and to cover them as well.
Yeah, I think mostly the same user base as Zerion. For us, like our products are a bit more sophisticated. I think that ETF-like products or trading products are really available to Western countries, but we are seeing so outside of U.S. and Western Europe, we're seeing a lot of interest in China, South Korea, and kind of Japan as well. We have some interest from India too, particularly like East Asia, where a lot of the interest is a bit more speculative. Our products are very appealing too.
From, as we're talking also about the different countries, different areas, obviously each country has their own regulatory environment. Can you talk about, I mean, even though this is DeFi, can you talk about, the role that the regulations play and how important it is?
Yeah, we spent about 6 months like just working with lawyers and thinking about regulation. If you haven't really kind of figured out your plan, it's the biggest thing that keeps you up at night. For us, there are a few things. Like one is we remain non-custodial, so we don't hold kind of users' funds. So that's pretty much means that you don't need to like apply for like money transmission licenses, etc. Two is like we want to focus on just like commodities. So we only offer for now like Bitcoin, Ether, and kind of USD or DAI kind of on our system, and that's to so we don't need to register or do things with the SEC, and we can offer our products globally. In addition to that, we're not. I guess a lot of people ask like, is a set a fund? Answer: do we need to be a RIA, registered investment advisor, or a commodity trade advisor? The answer is no, because all of the software or the logic for how kind of a set runs is really kind of defined in smart contracts, right? Once you've defined it, you can't really change it anymore. So I think that it does keep us up at night. And if we move to kind of offering securities or doing managed stuff, where a person's managing it, then I think that there's a lot more work that we need to do.
Yeah, that doesn't sound like DeFi to me, but.
Yeah, for us it's like the same idea. So we're trying to remain being non-custodial in any way. So like you can connect any wallet that you already use where you store your private key to start using our interface, and we proxy all the transactions directly to the Ethereum blockchain, directly to the smart contracts of the underlying protocols. So we do not control our users' money at any step, which makes us. So we don't really need to comply with any like money transmit licenses or anything else for now, because we don't have our own smart contracts. We do not have any control over private keys, so it's just basically an interface for that. So like I think the only place where you can actually face some like KYC, for instance, and it's like on ramping, but we delegate it to our partners. So basically we just partner up with different companies in different countries who do that. So they like collect some personal data, etc., which is required if you want to purchase some crypto using your US dollars or any other fiat currencies. But except for that, if you're already in crypto and you just start using our interface, you can do it from any country, and we didn't take any custody of that, so we don't need to comply with much of the things, like at least for now.
Yeah. So what we've done at Kyber is we've kind of split it into two. So there's Kyber Network, which is the smart contracts, which are on-chain, which run decentralized. They don't hold any custody. And then we have Kyber Swap, which is an exchange interface built on top of that. So Kyber Swap itself falls under Singaporean authority regulations. So whatever a money transmitter has to do in Singapore, Kyber Swap kind of complies with that. So we don't allow trading over certain limits, for example, 5 or 10,000. But at a smart contract level, anyone can freely plug in and kind of exchange as much as they want. So that's how we've kind of split it to reduce our legal liability. So we can run Kyber Swap. On top of that, follow the rules and regulations of the local requirements, but then Kyber Network is open to anyone to use, and we don't have any blacklisting on chain anyway. That's completely agnostic. Anyone is free to use it. And we do have partners that they don't have local restrictions, so they won't have that $10,000 daily limit, for example. That's how we kind of solve this regulation problem.
Was it easy to decide on Singapore, or was that a tough decision?
Well, the team was based in Singapore, and the regulations were favorable there. So we did start off there, and then we said, okay, Malta is kind of favorable as well. So we thought maybe we'll do something as well over there, kind of regulatory arbitrage. So we're kind of split between the two.
Yeah, so we're in a pretty like we have like a bullseye on our back, right? I mean, We have like the most volume. We have the most assets in our smart contracts. We are launching multi-collateral DAI later this year, where we will bridge, legacy world assets such as, commodities, bonds, stocks, and so on, and put them in our smart contract. And with those assets, that needs to be regulated, right? I mean, this is, taking legacy assets and, locking them up. So what we fall under yet is still to remain kind of like it's not really secure yet, right? But we have seen, for example, the European Central Bank, they came out with a research paper on like recommendations on how to deal with stablecoins, and MakerDAO had its own section, right? So
did they talk to you? Did they interact with you?
So we know the guys who wrote it, but they didn't interact with us in regards to this. I just know that one of our lawyers had like conversations with them prior to them writing the report, and then of course that some of the information he gave them then fell into the report, but we weren't aware of that at the time. But we have like a very proactive approach. So for example, we also know that like some of the activities we're gonna do. So for example, right now we have Oasis. We actually have Bartek who's leading that project here, and Oasis is our own decentralized exchange. And when you do only crypto-to-crypto trading on a smart contract level, as Deniz said, right? I mean, that's something that, it doesn't currently fall into regulation. But at the same time, we also see that, the financial regulators in the UK, they have gone out and actually given a statement that they want to, pursue people who created the decentralized protocols, which, in a sense is it's insane. I mean, how can you say that, right? I mean...
So are you going to London anytime soon?
I was there earlier this week.
So great. So this panel has been great. We got just a couple more minutes. I'm going to finish off with each of you in 30 seconds. The name of the panel is What's Scaling in DeFi Today? If we're here a year from today, make a prediction about what do you think you'll be talking about that's the most important thing about what's scaling today in DeFi next year?
The success that all the layer 2 solutions have brought us.
Yeah, I think probably in a year's time we're going to be talking about something that we haven't even seen yet, something that might pop up in 3, 6, 9 months that maybe we hadn't imagined and thought could be possible, but because of the composability suddenly is possible and is solving a huge problem. I think that's my prediction.
And do you think at that point we'll be scaling? We'll really have
That's a whole different problem with ETH1 and ETH2. That's a whole different kind of worms.
Yeah, I hope in a year we at least manage to solve the usability problem, like abstract away the private keys and all the complexity, so at least to make it usable by average people outside of this bubble right now, I'll say. So hopefully more people are coming into the space.
Yeah, I think...
Got the last word.
Okay, well, I'll be very controversial then. I think that we will probably see the scaling of like a big kind of bust as well. Like, I think it'll be partly due to, I guess, the composability and the compounding smart contract risk when you combine like 10 protocols together and one of them is like, maybe not formally verified or has an issue, that kind of trickles up to everything else that depends on it. So I think that we need to, it's inevitably going to happen because the risk is like non-zero. It's more of a when does it happen?
The sooner the better.
Yes, the sooner and the more iterations we go through it, the better when it affects fewer people.
I mean, do you think when that happens, do you think it'll be devastating to the industry or just a little bump?
No, I mean, for now, but I mean, the DAO happened in 2016 and the community got over that. We don't even think about it anymore. But it results in a hard fork. I think that, with Bitcoin...
we're still talking about it today.
Well, I mean, it doesn't affect us today as much anymore, right? We remember it as a history lesson. And I think that, what is to come will also be another history lesson.
Yeah, I think it also depends on which protocol it happens to, right? I mean... if it happens to one of the bigger ones, God forbid, but then, it will influence a lot more people, and I think that would, set us back like a few years, potentially. But if it happens to like a small protocol, I mean, then, and it's only, a very, very limited pool of people that gets affected, then it's different, right?
Okay. Well, perfect. We ended right on time. Thanks a lot, guys. You were awesome. Let's give them a big hand.
Thank you so much.
Thank you. Thank you.